right, well, hello everyone, and welcome to the enterprise stage. This is the Pristine Collateral and Bitcoin-backed mortgages panel. Up here, I have with me the panelists today, Sam Abbassi, the CEO of Josip, Adam Reeds, the CEO of Ledin, Josip Rupena, the CEO of Milo, and Edward Rodriguez, co-founder and CEO of BPN Capital Group. How are you guys feeling?
Feeling great.
All right, cool. Well, thanks again for coming out. We're excited about this topic. The Bitcoin mortgage scene is a relatively new one. It's one that's getting a lot more attention, though. I've heard it mentioned actually multiple times on the main stage at this conference. And it's a topic that we're going to dive into. So, Sam, I want to start with you. Your product that you're working on basically starts at the front end of the mortgage process. So tell us a little bit about proof of reserves and how mortgage lenders basically verify that I have the Bitcoin that I say I have in order to qualify for the mortgage I'm trying to get.
Yeah, definitely. So thanks for having us. Thanks for coming, everybody. So proof of reserves is a general concept within the Bitcoin ecosystem. It's the idea that an exchange can prove to you that they have the assets that they should have, right? You have an IOU with the exchange when you buy Bitcoin on Coinbase or Kraken or anywhere else. You assume they have the assets on hand, the actual Bitcoin on chain, but you don't know that. But they can easily prove that to you because Bitcoin's a cryptographic asset and proving that's very easy. So what I realized trying to get a mortgage was that if you have Bitcoin on a Trezor or a Ledger or a Cold Card, or using self-custody particularly, it's hard to have an underwriter, a lender, or a broker assess those assets and verify those assets. So what Josip is doing is building a framework around expression of ownership. Bitcoin is this asset that's kind of siloed in different places. You can own it in different ways. So building sort of a layer that allows you to prove your ownership to any given counterparty, I think will unlock Bitcoin's real value and potential.
Love it, thank you. So let's back up a little bit. Say I'm a Bitcoiner, average Bitcoiner, I have like, let's say, I don't know, 6.15 Bitcoin, right? Thank you to the one person who got that reference. And I'm trying to buy a house, right? Why wouldn't I just call Wells Fargo or Bank of America? Adam, what do you think? Why would I call Ledin?
Yeah, so really, we introduced the Bitcoin mortgage out of an evolution of listening to our clients and what they really needed. And what we found was that many Bitcoiners are wealthy, obviously, in Bitcoin, but when it comes to traditional income, they may not qualify, or they may already own a home where they're paying interest on and they've maxed out their income collateral, but again, they're very wealthy in Bitcoin. So really, by looking at that and treating it differently, you can start to do different things with it.
So when we talk about this concept of pristine collateral, I think it's important to recognize that Bitcoin is actually changing the way that lenders look at this collateral, right? There's so many features about Bitcoin itself, and it sort of becomes your credit worthiness, right? So Josip, what's been your experience? You guys are actively taking clients. When people come to you, what sort of challenges do you run into in terms of having your investors understand that, no, this person's good for it, Bitcoin is their credit worthiness, and some of the ways of sort of qualifying people in traditional mortgages, that's in the past.
Yeah, absolutely. Thank you for having me and being on this panel with all of you. I started Milo a few years ago with the idea of helping people get credit and really sort of be able to qualify for mortgage. And through this, sort of launching this crypto mortgage and this opportunity, specifically around that, to be able to expand credit, think about things a little bit differently because of the absence of maybe some information to be able to qualify, and really looking at Bitcoin as this sort of perfect collateral that an individual has to be able to qualify, and really think about it as a factor of a consumer and really their ability to pay, and sort of their desire that they can and that they want to pay, and really sort of build a product around that.
So this market is brand new. It's definitely expanding. We're talking about specifically residential mortgages, but there is another growing market in the commercial real estate space. Edward, can you share a little bit about what your company is working on in terms of commercial Bitcoin-backed mortgages?
So pretty much, we started in 2018, and mortgages is a very regulated industry. So obviously, we wanted to make sure that we comply with every single regulation, because every time you say the word Bitcoin, they think that we don't want to comply, and it's because we're the rebels. And 3 years later, we actually accomplished to get the regulators happy with what we were doing. And what we're doing today is doing commercial mortgage-backed securities on blockchain. Not only that, we're working on creating a fund where we're going to purchase non-performing debt from large financial institutions and allow people with Bitcoin to actually go into those instruments. So we are growing the ecosystem of Bitcoin and allowing investors to diversify their portfolio into these large, enormous industries that have only been able to be exploited by the 1%.
Okay, I want to try to get really practical here. Again, going back to this scenario, 6.15 BTC, that's about $264,000. Why wouldn't I go to, let's say, BlockFi or one of these companies that do current Bitcoin lending products? What is the value add of introducing real estate into the equation? Adam, what do you think?
Yeah, so in a way, we've been doing real estate loans since inception. So we created Canada's first Bitcoin-backed loan in 2018 and expanded that really globally shortly after that. And we watched a lot of our clients use exactly that, the original Bitcoin-backed loan to buy real estate. The key challenge with a Bitcoin-backed loan is the liquidation. So the ability to meet margin calls if there's a drop in the price of Bitcoin. So when you introduce real estate collateral, you now have a very liquid asset like Bitcoin alongside a very stable asset like real estate. And by combining the two, you really have the best of both worlds. So the key innovation was being able to extend the margin call timelines, so giving up to 2 weeks to allow people to meet the calls. So that was really the key piece of it, was extending that timeline and providing more value so that you're not caught in the middle of nowhere, not able to send Bitcoin to meet the collateral top-up.
Got it. So right now, in a current Bitcoin-backed loan without real estate, what's the margin call timeline typically, like on average, would you say?
Yeah, it really can be instant, right?
Wow.
So the price of Bitcoin could drop rapidly, and Ledden's current Bitcoin-backed loan is when it hits 80% loan to value. We liquidate Bitcoin to repay the loan and close it out. So, generally the price doesn't move, that quickly, but it can over time. If it can drop week over week and then have a sudden drop, you can be caught in the middle of that. So there's really only been 2 instances when that's happened rapidly. March 2020 and May of 2021 last year. But it's still something that keeps Bitcoiners up at night. So we're doing our best to solve that piece.
Interesting. So, and I imagine as the market matures, lenders and the secondary market's going to be more comfortable with this idea of, Bitcoin being pristine collateral, and maybe the liquidation trigger is even longer than 2 weeks. 2 weeks is the innovation because real estate is there, but in the future, there might not be a liquidation trigger. Just like right now, if I get a mortgage from Wells Fargo and the real estate market tanks, Wells Fargo's not calling me and saying, hey, you got to move out, right? Mm-hmm. Or you got to pay out your entire mortgage due. Josip, what is your approach to the same question around margin calls and liquidation?
Yeah, I think that what we were really focused on when we decided to launch this crypto mortgage and really sort of create it, sort of pioneer the way, it was really focused on the term. Really thinking about, when you're buying real estate, you actually want to hold real estate for a longer period of time, and really sort of looking at that and really creating the first 30-year crypto mortgage where people can actually hold real estate for a longer period of time and sort of falling in line with the ability to keep your crypto for 3, 5, 7 years, and at the same time being able to buy real estate. So really keeping both of these fantastic assets for the long term and really building the time horizon to do that, and not having a shorter term where I think that there are places for 1 and 2 year type loan, but I think that real estate is one of those categories where you really want to have 30-year time horizons to be able to pay. It helps you in the essence of not having these massive payments that you have to make just to amortize a loan over a shorter period of time, but really being able to make smaller payments over a longer period of time and really build wealth with real estate, and at the same time holding Bitcoin, which is really what I think we all want to do here.
Love it. Okay, so let's walk through this. Right now, I want to buy a house. I go to my lender. I get a pre-approval letter. I take that pre-approval letter to my real estate agent, and I go find a house, I make an offer on it, I show them that pre-approval letter, they say, all right, the seller reviews it, says this pre-approval letter looks solid, this person's good to go. Joseki comes in and now is saying, your pre-approval letter is also backed by the fact that we've verified that you have this 6.15 that you say you have. What's been the response from lenders as you're talking to them, and what's their level of comfort with this technology? Is it the kind of thing where they're sort of knocking down your door and saying, hey, we need something like this, more of our clients are asking for Bitcoin-backed loans? Just kind of walk us through what the sort of institutional response is.
Yeah, it's growing. Every phone call we make, we haven't had someone say no yet. There's a lot of demand for people that are trying to use Bitcoin without selling it and without moving it in particular. So we're trying to serve a part of the market that may not be as sophisticated as the clients at Ledden and Milo are seeing yet, where they don't really know exactly what they can do with their Bitcoin. They're not comfortable. They don't like the idea of selling it. They're more long-term investors. And they may not want to move it either. They just want to be able to say, hey, I have Bitcoin. I'm creditworthy. We fundamentally think that Bitcoiners hold the most valuable and innovative thing that's been discovered by humankind, and we should be empowered by that, not shackled by the legacy system because of it. So we're trying to make that process easier. Right now, if you want to get a mortgage and you're self-custodying, you don't know who to go to. You don't know who's going to accept your assets, who will assess it. So we're trying to make that process a little bit easier, a little bit less friction, a little bit more frictionless, and with less friction, and have a network of brokers that will at least look at your assets and will assess them in some way and help you use it without needing to sell it. So just a quick plug, by the way, we're launching our alpha product on May 4th. Our new website's up, so please sign up, and we'd love to get feedback.
We'll allow it. Looks is a great app. Yeah, go ahead. Do you want to jump in?
So I'll jump in. I think we said yes when we spoke. So I think when you think about mortgage as a category, right? Mortgage is roughly 35 trillion. Real estate is $35 trillion here in the U.S. Mortgage is 10 trillion. I think that the products that like Sam is building and the things that we're doing, right, sort of pioneering with these crypto mortgages, we think there's this massive opportunity, right? We think this is $1 billion opportunity, but the way we get there is by companies like Sam and sort of everybody else helping us on the underwriting side, whether it's blockchain or not, to actually build a much bigger ecosystem, because that's how we're really going to have an impact to actually change the way that people have their crypto wealth and buying real estate. It's going to be a combined effort. It's not going to be just one single company. It's going to take a lot of us to actually build.
Definitely, yeah. The market is massive. Go ahead, Ed.
Yeah, so we are already actually working with 3 lenders, and we're getting them to truly understand that we want to make this and we want to do it the right way, because the biggest obstacle that we actually have is, again, that they think that, we have established AML, KYC, checking if the investors are on any old fact list, and give them the level of comfort. So that's the main challenge we have. We have 3 lenders today that are willing to accept clients, and we are in the final steps. So clients can actually use Bitcoin not only as collateral, but also as down payment, because that was another problem. Right. You see, you have $500,000 in Bitcoin, and you want to buy $1 million home. Well, up to now, you can now use your $500,000 as down payment. Right. And we're literally this close to getting that done. Yeah. You see, so, if we want this industry to grow, we need to make it grow with the financial system. That's the biggest, as Steve was saying, that's the biggest industry in the world. Yeah. So if we want to make the industry grow, we need to actually work with all of these other financial instruments that have been succeeding for the past 200, 150 years.
Yeah. So let's stick with regulations here for a second. Sorry, did you want to jump in before I move on?
Just a quick thing. Sure. On the Fannie Mae point, on the down payment point, so Fannie just changed their guidelines that allows you to use crypto for a down payment. You either have to liquidate the assets and season it for 60 days, so sell your Bitcoin, put it into a bank account, leave it there for 60 days, or show a paper trail of ownership, which is kind of where we come in. But the guidelines just changed.
The legacy system just proving itself useless once again. It's like, what is that? You either have to sell it, or, okay, anyways. So regulations are a sticky point here, and I think in order for this ecosystem to grow, we have to figure out a way to get Fannie and Freddie eventually on board. Private lenders are going to probably fill the gap in the meantime. But again, just thinking from a consumer standpoint, Bitcoin is pristine collateral. It's my credit worthiness. Why do I need a FICO? Why do I need to show you my W-2? Why do I need to give you my child's DNA sample in order to get approved for a mortgage nowadays? What does actually introducing Bitcoin to the equation, how do we make sure that the regulations aren't a hurdle for this? Adam, what have you ran into? I know Canada's regulatory environment, which is where London's based, is a little bit different than the U.S. One of the U.S. regulations that's required here is showing proof of income to the lender in order to qualify for a Fannie Freddie. Have you guys run into that problem, and how do you overcome it?
Yeah, so it is quite similar in Canada. To get a traditional mortgage, you're proving income, and really that's how mortgages work today, right? You're not even really lending against the asset, you're lending against your future income in order to prove that you can buy that asset. So Bitcoin is the same to everyone, everywhere, and that's the most exciting thing, is you can build global financial services on Bitcoin because you're starting with an asset that is equal and fair to everybody. So that's the exciting piece. So when you start with that, the only thing that does become local is when we start to get into traditional assets. So the laws around real estate are different. Property rights for physical real estate are different country by country. And that's the piece that we're working on, right? We're launching in Canada and the US first on our mortgages because we understand the property rights there. Eventually, we'd like to be able to offer this in every other country, but we have to figure out the local regulation in order to make that work. So
When we talk about property rights, you're talking specifically about how a buyer takes title and how that is protected. Like, I own this house, the county says so.
correct.
Okay, and that gets a little bit, outside of the US, Canada, it's a little bit more vague and ambiguous.
Yeah, so when you talk about Bitcoin, it's easy to do because you can take custody of it. If you have the keys, you essentially have de facto ownership or legal title to it. But when you're working with real estate, you still fall into the traditional legal framework of that jurisdiction.
Got it.
But the brilliant thing with Bitcoin is that it's jurisdictionless. So hopefully in the future, it natively enforces its own property rights. And that's why the US and Canada make a lot of sense because we have strong legal frameworks around property. But the reason why the third world is poor is not because of culture or any sort of weird idiosyncrasy. It's because they don't have good frameworks around property rights. So now we have Bitcoin, which is global and jurisdictionless, and anyone is able to express it. So we'll be living in a better world, hopefully.
Definitely. Go ahead, Edward.
Yeah, so in the commercial side, that's one of the gaps that we want to bridge, right? So, we're building financial instruments that before were only reserved for the top 1%. Now we're going to allow people with Bitcoin to go ahead and invest and go in exactly to those financial instruments and take advantage of it. There's not a lot of diversity at the 1%. And pretty much that's what Bitcoin represents, right? Diversity, inclusion, that's what it's all about. So at BPN, that's our main focus. How can we put the right tools in the Bitcoiners' hands so they can actually, without having hundreds of millions of dollars, profit like the guys that have hundreds of millions of dollars and giving the access.
Yeah. I want to talk a little bit about how these loans are structured. So we have, in a traditional sense, you're buying $1 million house, if you put 20% down, that becomes your equity, right? Your LTV, your loan to value ratio is 80%. When we introduce Bitcoin and we cross-collateralize Bitcoin with the real estate, what's the new calculation for LTV, Josip?
Yeah. So one of the things that we were thinking also with this product is the ability for people to actually keep their Bitcoin, not have to sell it to be able to get a down payment. So we really wanted to create this concept where an individual could borrow 100% of the value of the purchase. And all they would have to do is essentially pledge their Bitcoin. And through that, we would do our internal underwriting process. We would order appraisals, title, insurance, because all of these are fundamentally good for the consumer and us as a lender. I think what our approach has always been is that we are a direct lender. We use our capital so we can make up our own underwriting guideline of how we can actually lend. So that gave us a lot of flexibility where we weren't really stuck by the confines of Fannie and Freddie and some of the US standards, that we could actually think about the product a little bit differently. So today the structure is if you want a $500,000 loan with us, we're going to require at least $500,000 of Bitcoin. That's something that we expect that over time will evolve the product, but we're starting with a place where we think we can defend that given that mortgage is so heavily regulated here in the US, the element that laws are on a state-by-state basis. We really wanted to build a product and really sort of take the responsibility to sort of pioneer this industry forward, having the communication with the regulators to actually be able to expand credit to as many people as possible. But this is all really sort of rooted in starting from a place and then continuing to make this product better and better over time. And I think that that's going to have the biggest impact for most consumers, right? Sort of thinking that 1 out of every 8 consumers last year sold some crypto to buy real estate. We believe this is a big opportunity, and we have a responsibility to do it right with regulators and with structuring and product and everything else.
Amazing. Adam, do you want to respond to that one?
Yeah, we're actually the same on the underwriting. So we're also, putting up, $1 million worth of Bitcoin to buy $1 million home, and that's really just for the equalization. So theoretically, although none of us in this room would ever believe it would happen, Bitcoin could go to a very low price, and you'd still have 100% of the real estate backing that. So that's really the setup of it to get started. And similar to what Joseph's saying is, this is going to be an evolution. You can see a world, 2 or 3 years from now, where we're offering, 30% down, 20% down. Just like traditional mortgages, how you're thinking about putting that amount of cash down on there, but baby steps, we'll get there.
Awesome. So having been in the mortgage industry, I know one of the first questions consumers always ask is, what's my interest rate? How is a Bitcoin-backed mortgage interest rate calculated or determined? And I'll just throw that out to whoever wants to take it.
Yeah. I think that one of the things when you think about rates, mortgage being such a large category, there's a very fluid rate structure out there in the world. It's very easy to understand, where the U.S. government decides to essentially subsidize mortgage rates, and then if you're taking on more risk, those rates naturally should be slightly higher, right, to compensate for that. With our product today, we decided to start at 5.95% interest rate, so that's for that 1-to-1 ratio. If you're able to pledge more Bitcoin, then if it's a 2-to-1 ratio, then it's 4.95. If you're able to put three times the ratio, it's 3.95. And we felt that this was a good place to start. As many of you have actually seen, rates have moved pretty significantly to the upside. They've actually moved about 2% this year. So we believe that that's a good place to start, and we really wanted to add as much value as possible and try to get this crypto mortgage into as many consumers' hands to really start the virality of what is possible with Bitcoin and a crypto mortgage and really help as many people as possible.
Awesome. All right, so we are going to get ready to wrap up here in the last few minutes. I'll give you guys a chance to give final thoughts. So this is the enterprise stage. I don't know if you noticed how difficult it was to get here. This is one of the fullest panels I've seen today so far. So there's a lot of interest in this topic. Like I said, last year this wasn't even on anyone's radar. This year we've heard it mentioned multiple times from the main stage. We have our own panel dedicated to it. There's at least a couple of really exciting products already out there. So what does the future look like? What are your predictions? What are we going to be talking about next year at this conference when it comes to Bitcoin-backed mortgages? Edward, we'll start with you and we'll wrap up.
Yeah, so, we started in 2018, so we are very close to the finish line when it comes to commercial mortgage-backed securities. And we have decided to concentrate on that area particularly. And for the dream will be that by last year we'll have multiple commercial mortgage-backed securities on blockchain already up and running. We have all of the structures already. We went through the regulation, which was the biggest hurdle. It took a long time to get it done. We finally got it done. We have a platform that's fully compliant with all of the regulation, and that banks actually are looking into to mirror, right? Because what we have done at BPN is, my background is partially in commercial real estate and quantitative risk analysis. So I have made it similar to how it looks in their side, even though we're still using blockchain. So if we want any technology to advance, we have to make it useful. The reason Steve Jobs was able to get the computer out of the computer room was because he made it easy for everybody to use it without having to understand it. And that's, I believe, our main challenge. That's the job that all of us have in this panel. We got to make it in such a way that people don't have to learn and understand the back end of the technology to be able to take advantage of it.
Awesome, thank you. Joseph, final thoughts?
Yeah, I think that I think the beginning of this year, I think for both of us, right, really pioneering with a crypto mortgage. I think that we'll sort of fast forward a year from now, and I think that this will probably be one of the hottest sort of sectors in crypto because it's really combining two really important things: the ability for you to continue to hold your Bitcoin for the long run, as well as diversifying with real estate, which I think for many individuals here that have made wealth through Bitcoin, it's really important to think about where you actually live and the ability to buy real estate. And for the first time, I think with our products, we're really paving the way of what a world could look like by changing how you underwrite a consumer, how you underwrite their assets, and then what you're able to do with products, and really sort of combining what is a very tangible asset like a home with the ability of combining something which is more liquid but is really verifiable, that symbolizes the wealth that you've created with Bitcoin, and combining both of those asset classes. There's no shortage of possibilities of thinking about that for other credit products and other credit cards and other things like that, where you're able to combine this, and us really sort of having this responsibility to be the first set of companies that is really creating sort of these alternative models of credit and expanding credit to a whole community and really sort of this crypto community. So I think that this is really sort of the beginning of this journey, but I think it's really the future of how do we think about really tangible things for people that have crypto wealth and that are choosing to invest with crypto that are really thinking about this to keep crypto for the next 3, 5, 7, 20 years, where it's a fundamentally different world, and we're really at the early stages of this. I think a few years
I'm going
ago...
to cut you off right there. I'm going to let these
Yep,
guys
go
wrap up. We only got 1 minute left. Go ahead.
Yeah, no, I think when we talked about how Bitcoin's equal to everybody, and the other thing that's equal to everybody is everybody wants to own a home. So I think that's what we're very excited with this product. And I think, as you were mentioning, in a couple years from now, I imagine this is going to be very widespread. And the thing that, I've just, who you trust your Bitcoin with and who you bring to in that collateral package is extremely important. So I think long and hard about, who you're sending your Bitcoin to and how you think about, managing that going forward. So yeah, I think, what you can expect from Ladin in the next couple of years is we're going to keep innovating, and I could see us using Bitcoin to finance many other asset classes in addition to real estate. So excited to be a part of that journey.
Awesome. Thank you. Sam.
Yeah, I think by next year, hopefully, I see Bitcoin being more widely accepted as a form of credit. We hope to drive that growth. I hope to see, a red carpet doled out for Bitcoiners. We've proven ourselves to be sound fiduciaries. People are going to want to give us loans. They're going to want to work with us. And we hope to make that easy by advocating and providing a good platform for that.
Awesome. I want to thank you all for joining this panel. Really enjoyed this conversation. Thank you for coming. Enjoy the rest of the conference.